This conference will now be recorded.
Okay, good afternoon, everybody. This is Greg Morton. It is Sunday, January 2nd, 2022, as we kick off a new year. And this is the weekend update for Canslim Growth Stock Investors, brought to you by the Greenville Eastside IBD Meetup Group, as well as the Stockyard Meetup Group. So as always, this is for educational purposes only. Not recommend any stocks or securities to buy or sell. All investing has substantial risk of big losses, so you want to learn first and only then invest. So today we'll look at the M factor. We have a Santa rally attempt going, but with low holiday volume. Current trading plan looks like wading in a little deeper, could be permissible. Things to do this week. We'll start the year off with 5 constructive Canslim charts right now, and then we'll talk about our upcoming meeting and the prior meetings. So the M factor, as O'Neill teaches us, is the most important letter in Canslim. We want to diagnose, interpret. We do not want to predict. There'll be a lot of people predicting this time of year, and they have absolutely no way of doing that accurately. They may look up, but it's just something we don't do, and it's also something we ignore when we see it. Instead, we look at what O'Neill tells us to look at, which is the action of leading stocks, the actions of stocks owned. I would say the group teaching portfolio is surviving, not really thriving yet. And market pulse, distribution day count, price and volume on the indexes. So current leaders, I just threw together a quick list of, these are the big cap leaders that are holding up well: Google, Tesla, Applied Materials, I put Microsoft in there, Apple, NVIDIA, AMD, put HD in there right now, Home Depot, as well as Abbott Labs, ABT. So not saying any of these are actionable. They're obviously all very well-known names, and I'm just putting them on the list to see how the leading stocks are doing, and these are all holding up well. So that leg of the stool looks pretty solid. So let's look at the indexes. Go over to Market Smith and go up to indexes. We'll start with the daily chart. So here's the NASDAQ. We had 4 low volume days last week, kind of trickling down, which is to be expected during a holiday week. Still holding the 50-day, holding the 10, holding the 21-day. So we're still above that critical 21-day. So it looks okay, not stellar, but not bad either. S&P 500, again, moving average lines are all in the correct order, stacked properly, hit all-time highs or all-time closing highs a couple days this week. Low holiday volume, so hard to read anything into that or get much out of it. NYSE holding tight, steady, moving average lines are good. Dow, same thing. All-time highs, all-time closing highs, some this week. Again, the low volume. Russell, here's where we see more danger. So we're still under the 50-day and fighting at the 200-day, holding above the 10 and the 21. But obviously that's the weakest index. S&P 600 battling right there at the 50, but still looking better than the Russell, as it's above all the moving average lines. So the indexes look okay. Again, not stellar, but it's a good environment. We're holding above that 21-day on the NASDAQ and have it pointed up. So that's very encouraging. And let's flip over to the coloring book. So you can see here right before Christmas, almost everything flipped back to green, and did flip back to green on the day after on the MMTS on the Russell. IBD went back to confirmed uptrend, and the window of opportunity opened. So all those are green and holding up. We have low distribution days since the uptrend started. 0 on the NASDAQ, 2 on the S&P 500, 1 on the Dow. The buying selling days, it's only 7 buying days and 11 selling days. So that's still upside down. Like to see that improve. But again, that's just one factor that I look at, and just, not much going on in the way of breakouts or anything on these low volume days, and not even many stocks moving up and down on volume. So the the list got shorter. So we'll head into the new year and see what happens Monday. And do the big traders come back next week? And do we see the indexes moving up, or do we continue trending sideways, or do we head back down? We just have to watch it day by day and interpret it as it occurs. And if we look at the group teaching portfolio, so these would be the year-end stats too. So we're up 14.5% for the year. We go into next year 46.5% invested on a cash basis. We have 3.85 full positions. All of them are a little bit green, but smaller gains, except for those Olaplex calls, which are up significantly when we started those. Everything else, 5% or less gain currently, and applied materials is actually down a little bit and has come back below the pivot. So that's sort of where we are on that. So these are the positions we'll carry into the new year, and any new ones we'll put in here. I'll actually start a new spreadsheet that starts with everything shown here for the year, and then this one will still remain in place for last year. So let's go back over here. I think we looked at everything there. So in light of all that, I still would treat this week as green light conditions currently, at least starting Monday. Additional weighting in, i.e. more exposure is warranted, but we'll be very disciplined on our watch list stocks and entries. And we only want to be waiting further when the existing exposure recently taken on is making progress. So still go right now, no exclamation mark or anything, just, okay, all right, we're being cautiously optimistic as our current interpretation, and just being very careful going in, and still time for lots of this, thinking, studying, doing your watch list, that sort of thing. And the key reminder, Canslim works better when the NASDAQ's trending above an uptrending 50-day SMA line. Works best when the NASDAQ's trending above an uptrending 21-day EMA line. So we're in a favorable environment now. So that's good. Again, it's not red hot, but need to see some breakouts, and it's fine if it takes, another week or two for some of these bases to get completed and maybe build some handles. So things to do now is post-analysis time. So maybe go back and look for your 5 best trades or your 5 worst trades. Go back, study the charts, mark your entries, your exits, and then what do you learn for those? And then how will you correct those issues, errors in 2022? So that's a great exercise to be going through now. And I'm going to try to do it more contemporaneously as we go through 2022 in the group teaching portfolio, and maybe add a new tool in there to help us with that. So we'll probably look at that at our meeting in January. So charts, so let's look at 5 to study. Maybe these are ones to even keep a good eye on over the next couple months. Let's go back to Market Smith. See what I put in here. Okay, so 2 of these are IPOs. So this is Olaplex. It's been covered a lot on Twitter, on IBD Live, in the newspaper. It's in the Growth 250 list. It's got fund sponsorship, tried to break out. I'm gonna call this IPO base, although I think it's a consolidation based on how long it went officially, but I'm still treating it as IPO base. Had a couple horizontal sloping trend line entries came together there on Thursday. So that area, 2809, was an early entry area. And then again, it tried to break out on Friday, holiday day. Is interesting to see. This was strong volume for the day compared to what the indexes and everything else did with the holiday volume. So there was some buying coming into that stock. Has great return on equity and pre-tax margin. Those are just stellar. Debt's a little high at 142%, and it's a liquid IPO. And because the 50-day moving average line has shown up for more than 2 or 3 days, we can trust the volume now in Market Smith. So should have been on weekly chart, sorry. Well, no, daily, it was an IPO, that was fine. So that's what it looks like on the weekly chart. Then GFS, this is in the chip sector, almost have the same horizontal and sloping trend lines we can draw on that chart. That's the weekly, daily, sort of the same thing. It's at the intersection of those. So got a stage 1 IPO base, 23% deep, about the same depth as Olaplex, interestingly. I think that's right. Go back and check. All right, yeah, 23%, the same. So this one's more of a turnaround story. So it has some negative return on equity and negative pre-tax margins because it was losing money, but you can see those were decreasing. Supposed to have a significant profit in 2022. This is a big chip company. This was a big IPO, raised, I think it was over $2 billion. So it's probably going to be liquid. I mean, that number is going to be skewed up because it's an IPO, but yeah, 178 million per day. So, and triple digit earnings and strong double digit sales. And if you'll go to their website and read some of their press releases, you can read about their collaboration with Ford. They also just extended and renewed the big deal they have with AMD for AMD to purchase from them. So check out the news on that one. Applied Materials, of course, this is a well-known name, but this 11% deep stage 2 flat base has fund ownership, obviously very liquid, 1.1 billion per day. And again, very strong return on equity and pre-tax margins. So with the chip shortage, this is in the same area as GFS. I was trying to remember, this one's in industry group 21. I think GFS is higher, number 12. Okay, so they're both up there. And then West Pharmaceuticals, you can see it, maybe let's see if the base is on the daily chart. Yep, okay, so you got a cup with handle, a little bit extended, still in the buy zone. Decent return on equity and pre-tax margin, liquid 182 million, has good fund ownership, got Fidelity, Contra, and T. Rowe Price in there. Oh, there's the base on the weekly chart too. So stage 2 base, just, good numbers. 2022 estimates only 7%. That's a little bit low. Nice to see the RS line go to new high with price. And then finally, here's Datadog. So got a stage 2 consolidation, kind of broke out of this long base here, basing area, out of its all-time high. It's made a nice run, good Canslim numbers. Return on equity, pre-tax margin are not as good on this one. Liquid 621 million. So those are just a couple I threw in a list that showed up in my weekend review that could end up on a tier 1 watch list, or for ones, those first 3 we have in the group teaching portfolio. So we're looking for add-on buy points or increasing exposure on those. All right, go back over here. So our last meeting was back on December 14th. These were the things we covered. I've shown you this slide last weekend. So we looked at the impactor, Canslim nuggets, looked at the rally day, follow through day system in detail, and EPS season and viable gap ups. Coming up, our next meeting, actually I scheduled it a little while ago, Tuesday, January 11th. You can sign up at the Stockyard Meetup site. If you're a first timer, I send you a courtesy copy of the December meeting recording, slide deck, related links. In January meeting, we'll do some post analysis. We'll see if we see some stocks we're watching for earnings gaps coming up. We'll talk about IPOs, and we'll do some stock chart review of stocks you guys picked. And if I have something educational to throw in beyond that, I'll throw it in, although we may spend a little bit of time in the post analysis part. So prior meetings can be ordered. These are $15 per meeting. You can just send me an email at that address. You can join the Greenville Eastside IBD meetup site. That's free. The Stockyard meetup site is free. And obviously, you know about my YouTube channel because you're watching this on it. But do like and subscribe on there. There's a lot of other good videos. There's a video on using the group teaching portfolio. If you're not keeping good records and you want to track it better, you see how I do it each week when we glance at that, and we cover it at the meetings in more details. So you can download that from the Greenville Eastside meetup site, and then there's a teaching video on how to use it and set it up for yourself on the Stockyard YouTube page. So that's it. Happy New Year. And then I have the same slide I had last weekend. All the predictors have the exact same view that we all have, which is this. So we don't know what lays beyond the fog. Hopefully there's going to be some tradable sunny trends, and we'll be able to capture the meat of those. And there's going to be some rainy, nasty days when we stay inside and sit on the sidelines. More than days, trends. So we want to be careful. But that's it. I wish everybody a happy new year, and interested to see what this week brings us. See you later.